All right, guys, back to work. Boy, fantastic job today. Hope you guys made some money out there as well. Had a fantastic day today in our morning trade room. And we're back to work tonight. We had a big move down this afternoon. Now, big moves are big clues in my world because anytime we see a big move that we saw this afternoon, there are two types of setups we always look for the following day. The first one is pretty darn easy, but the second one is my favorite. If we're lucky, we'll get that setup number 2 tomorrow. We're going to cover all the details, of course, in tonight's video, both the trades I'm watching for tomorrow. I want to make sure everyone has a game plan to make some money on Wednesday morning as well. So charts ready to go here. We've had a fantastic day. Let's go find some more winning trades, make some more moolah on Wednesday morning. I have 3 very simple but important clues right now on the charts in front of us that are tipping me off to where I think the winning trades are waiting for tomorrow. One of those big clues is right here on these hourly charts, these 60-minute time frames. I like to use the hourly charts as an overall directional filter, and you can easily see here we're very bearish overall right now on the S&P and SPY, bearish overall here on the Nasdaq and the triple Qs. Again, this is good for an overall directional filter, but the one thing these hourly charts are not going to do, they're not going to help us time the entries. I have 2 more important clues on some tick charts, some faster time frames that I think will make it easy to pick the perfect entries, make some money tomorrow morning. Before we dive into that though, and talk about entries for tomorrow, let's check schedule for tomorrow because remember, we have a kind of a weird week this week. The markets are closed completely on Thursday in honor of the late U.S. President Jimmy Carter. A day of mourning was announced late last week. Why that's important for us tomorrow is there really aren't any major news I'm worried about for tomorrow. The employment report, jobless claims, the biggest one I see right now is the FOMC mini minutes, but none of these really get me excited for big moves. We saw a nice big move off that ISM services number if you tuned in to last night's video, but there really isn't a lot of major news tomorrow that we care about. My biggest concern tomorrow will be getting in as early as I can, because as the day gets later, remember the day is completely closed on Thursday. So all the big lot traders, the folks that move these markets around for us, they're not going to be taking big positions in the end of the day tomorrow. So my mindset tomorrow will be get in as early as I can. And as always, I'll leave some runners into the close, right? But not looking to enter new trades, middle to late afternoon. So keep that on your radar for tomorrow. In the meantime, back to our charts because we all know by now, right? The money is made on the charts in front of us. I mentioned earlier that the first big clue tonight was this bearish move here on the 60-minute time frame, right? Bear market right now on the 60. Great to use the hourly chart for the overall directional filter. But let's drill down into some tick charts because tick charts are better for pattern recognition. And by the way, guys, all of the time frames are in the upper left-hand corner here tonight. And that, by the way, is the 21 EMA, in case you're watching for the first time. I mentioned earlier there are 2 more important clues here right now on the tick charts. One big clue, of course, is this big move down. Whenever I see a big move down like this, we're very low on the chart right now. I don't want to sell low. I want to sell high. And usually whenever we see a big move in one direction like this, we look for what's called a 2-legged pullback to allow sellers to come in and sell high, if you will. And of course, those bears, they want to run back down and take out a retest of that low. That's one really big clue. That big move down, expect a deep pullback, a 2-legged pullback, and a retest of that low. And arguably one of the most important clues here on the charts in front of us is that previous trading range. Now, we talked about this in last night's video. Whenever we see a range breakout, what do we always look for? A breakout pullback. Anytime we see a range breakout, a breakout pullback is pretty much always on our radar. So knowing that we have that range above us, boy, wouldn't that be great to get a nice 2-legged pullback into that breakout pullback zone and a retest of that low. So we're bearish overall on the hourly chart, big move down on the tick charts, and of course a range breakout. I mentioned earlier, in these situations, there are really 2 specific types of setups I always look for the following day. We'll cover the first one, kind of the easiest one right now, but I want to show you the second one on the Nasdaq a bit later on in the video. If we're lucky, we'll get trade setup number 2, and we'll talk about that a bit later on the lesson tonight. In all reality, that could be the most lucrative trade of the week this week. So let's cover the first one here, a two-legged pullback. Now, when I say two-legged pullback, think about a measured move that goes a bit too far. We go up once, up twice, right? Think about a measured move here. Measured moves are a really easy way to find that two-legged pullback. Now, that will give me the general area of where I want to sell, but as I always talk about on these videos, I'm not in the business of picking tops on this. It may go higher, it may go a bit lower. I'm not going to try to be that specific. What I'll do is once we get that two-legged pullback, now we're in a great place to use what I call a failure pattern, right? In other words, once this price starts pulling back here, let those buyers try once, let those buyers try twice. Now, why twice? Because now, once those buyers are committed, now I know where their stops are. Now, think about this. If you're caught long like this in an overall bear market we have on the hourly chart, what happens when you get stopped out? If you're long, you get stopped out, you have to sell your way out of that long position. So I like to use what I call a failure pattern. This would be a 2-try failure like I teach in our free video classes. And I'll try to sell right into those stop losses. So much easier to time winning entries by using stop runs like this rather than trying to pick some top, right? Because again, it may keep going a bit higher before it comes back down for us. So don't pick the top on this. I'm gonna watch for that two-legged pullback into that buyer failure pattern. Now, where does the market wanna go right now? The market wants to go back down and take out that low. Now, very important. I don't wanna sell low. I don't wanna chase after it. If you're in my free video classes right now, you know that anytime I don't want to sell low and I want to sell as high as I possibly can, I'm always going to use a basic entry pattern called a bull trap. These are technical bull trap patterns. Now watch how this pattern sets up here right now. It'll be a lower low in price and move just above that high. We saw one here late morning this morning. Runs down, lower low in price, right above that high. A classic example of a technical, in this case, a bull trap. So that pattern, I want to see it right around there. Again, one of my favorite trades here for tomorrow, we'll cover more on the Nasdaq here in a moment, is to get that two-legged pullback, that 2-try failure into that technical bull trap. And of course, the target, of course, is back down to retest that low. Now, one variation I do want to talk about is, sometimes we don't get that 2-try failure. Oftentimes we'll get a nice juicy two-legged pullback, but there's so many bears up here waiting to whack this thing back down. I simply may not get the chance to trap those bulls in and sell into their stop losses. If all I get is a V-top up here, most V-tops are going to wind up grinding lower on us. Now that grinding move lower is a really big clue, because now what I can do is I can mark a trend line off those lows. I can pin that trend line up around that high and create a channel. Then what I'll do is look left and make sure I find some prior swings. And I always want to get that first test off the high of that channel. So don't be surprised here if we pop up and we get smacked back down. We start grinding down. Remember, don't chase after it. Your patience will be rewarded by marking off that low, find that channel off that high, look left, find some prior swings, and as always, first test is the best test. And in all reality, this could be any of the entry patterns you guys are learning inside the free video course. It could be a bull trap, like I'm showing you here. It could be a buyer failure, a pullback combination. I just want to make sure I get that first short off the top of that channel. Now, I have one more variation I want to talk about here on the S&P. Before we move to the Nasdaq, we'll talk about that second scenario for tomorrow. Before we do that though, let's slow down for a moment, because I know most of you folks watching right now, you already know these patterns. You're making money on traps and failures already. But if you're watching for the first time right now, this might be a brand new language I'm speaking. What are traps? What are failures? Don't you worry, I teach the entire roadmap in our free video classes. In fact, I have hundreds of examples of traps, failures. Guys, I cover so much more of this in our free video course. I'll put a link up top here for you, upper right-hand corner. Hit that link that popped up there and take that free trading course, because the strategy I teach in that short video series will teach you a stupidly simple trick we use in our members trade room that tells us exactly where the winning trades are going to be each day. More importantly though, I want to teach you my 4 favorite entry setups so you can time better entries, make a lot more money while you're trading. Guys, the markets are way too good right now not to be making consistent profits. So if you're tired of missing the best entries each day, if you've lost your confidence in your current trading strategy, again, hit that link that popped up there. Watch that free video course. Everyone loves all the trade examples I include in that short video series. The best part is it's 100% free for you. And also keep in mind too, I'm going to put all the important links we talked about tonight in the description of this YouTube video. Start first, of course, with that free video class. Learn the roadmap, learn the setups. Most folks start making money on their own right from that free video series. And then don't forget, the place to be each day is in our trade room at 8 o'clock Eastern time. I'll put trade room membership links down there for you. And if you're on Twitter or X, I post a ton of charts and videos and mindset stuff throughout the day. If you're on Twitter X, give me a follow. Again, all the details you'll need to learn more about this stuff and hopefully earn a lot more are covered and linked up in the description of the YouTube video. So where did we leave off? Now you know where to learn more about all the entry patterns we're talking about. I mentioned earlier, I want that two-legged pullback, right? The trap in the buyers and back down again. Now, one thing you want to remember is whenever we have a bear market like this on the hourly chart, we oftentimes will get that two-legged pullback. We'll get our 1, 2, we'll get a nice, easy winning trade out of this. But for whatever reason, the strength of that move going higher is enough momentum to cause the market to make one more leg going higher. Now, it's very important to remember in a bear market in the 60-minute time frame right now, double tops are a gift from the trading gods. They're a gift to us sellers, because anybody who buys down here, they're probably taking their profit up here. Buyers down below become sellers up above. So this is a horrible spot to be buying up here, which means it's a great place for a double top reversal. Now, when I say double top reversal, think about that same technique, right? I don't know exactly how far it will go. What I do know though is once this thing pulls back and the buyers try once, try twice, now I have you trapped. I can use your stops to fuel that move going lower. And what was the add-on trade? Remember, if you want to make more money, add to your winning trades. And the way that you add to your winning trades is that bull trap pattern, right? That lower low in price and that move right above that high. Again, we know where the market wants to go. It wants to go back and retest that low, just like that pattern right there, right? Lower low in price, above that prior swing, and run back down again. So that double top, don't be fooled by a run back up again. That is not a full-blown reversal. Usually that is one of the easiest ways to make more money in an overall bear market, that double top reversal. All right, so that is the first scenario I'm watching for tomorrow, a two-legged pullback and a retest of that low. But I mentioned earlier that if we're lucky, we'll get that second scenario for tomorrow. Let's grab the Nasdaq right now. Nasdaq's getting lonely over here, of course. The Nasdaq is very similar, of course, to the S&P. Before we talk about the Nasdaq, though, if you're enjoying this video right now, please help me grow this channel by hitting that like button, subscribing, and sharing this link with other trading buddies, because YouTube rewards me every time you like and subscribe. I know we're all busy people these days. I appreciate you guys spending a few minutes with me every evening here on these videos. So thank you so much for the likes, subscribes, the shares, and all of the ongoing support. Now, let's get back to business here and talk about the Nasdaq. Again, the hourly time frame is fantastic for giving us the best overall directional filter. It's very easy to see right now we're bearish here on the hourly. We're not going to use it for much more than that. The real work is done over on the tick charts. And again, all the tick charts you'll see there in the upper left-hand corner. I use tick charts because they make pattern recognition a whole lot easier, and patterns are a big part of a successful trading day. Look at the size of that move. That's one big clue we see right now on the Nasdaq. Get that beautiful breakout pullback off that trading range. Now, speaking of breakout pullback, on the S&P, we had a much bigger breakdown from that trading range you're seeing here right now on the Nasdaq. I don't believe we're quite far enough yet to really use this as a breakout pullback, not after such a big move going lower. Now, if we can get a bit lower here, if we can keep going a bit lower here and free up some space, now I think that breakout pullback is really a great spot. Again, the S&P has a bit bigger of a breakout than the Nasdaq does. Nasdaq really needs to go a bit lower before we can start looking for this breakout pullback. Knowing that, what I would think about here is that pendulum swing. The amount below, the amount above. Boy, wouldn't that be a great spot for a two-legged pullback? Again, think about a measured move, right? A, B, C, D. Get up into that two-legged pullback area here. Get up into those overhead areas of resistance. And just like on the S&P, trap those buyers in, let them try twice. And as we roll lower, add to that winning trade. You want to make more money, add to your winners. You'll always add to winners with a bull trap pattern. And a lot of folks made some pretty good money on those bull trap patterns we saw late in the morning here this morning. So again, the same game plan I talk about in the S&P can be applied very, very simply here to the Nasdaq as well. But let's talk about that second scenario I mentioned earlier, because another very common occurrence after a big move in one direction is sometimes the market, it gets pinned down at these lows. Oftentimes after a big move going lower like this, we wind up getting dragged sideways in a range. Now, in all reality, ranges are even easier to make money with. I realize that most people don't like range-bound markets, but that will change once you learn how easy they are to trade with. The most important thing about ranges is they act like magnets and they love to rotate, right? So, for example, ranges will rotate back and forth above and below that range. And we're going to use things like a pendulum swing, the amount below, the amount above. We're going to use things like triangles, right? Expanding triangles to find levels of support and resistance and trade that rotation. So if we understand that part of how a range works. If we see a range above tomorrow, and again, this is not just for the Nasdaq, it could easily happen here as well on the S&P as well, right? But again, if we see a range here, the same basic idea is in play with one small little twist. For example, that range is a magnet. So as we pop up here, get up into resistance levels up overhead right now, again, I'm not in the business of trying to pick the exact top out there. We have to stop trying to be so specific, so exact on the entries. We don't need perfect to make profit. I'm going to wait for the price to pull back, let those buyers try a couple times, because again, it may go a bit higher, right? It may keep going a bit higher here. I don't know how far that pullback will go. What I do know though is this is a horrible spot to be buying, right? I would never want to buy that because you have all of that bear momentum. That range below us will act like a magnet in this scenario. And now remember, the failure pattern is one piece of the puzzle. Sell right into those buyers' stop losses. As we go lower, add to your winners with what? With a bull trap pattern. Same basic plan as we had earlier, but now this is where things get more exciting because now the amount we went above the range can now be applied down below the range. We're not looking for a retest of that low anymore. We're now looking for a rotation all the way back down again. This is why I said earlier, this second scenario, a range-bound scenario, has potential to be a lot more lucrative because we're not just simply trying to go back and retest the low now. We're trying to complete that range rotation. So the entry pattern is the same, right? That two-try failure and that bull trap pattern, but how we apply them and how we let the winners run are a little bit different, a little more attractive whenever it comes to a range-bound market. Now, number two, also too, same thing too, right? If we have a range up here or down here, if we do see a range brewing here, that same V-top, right? So we pop up. If we don't get that one try, two try back down again, that V-top will always be applicable, right? So pops back down, grinds back over, nothing different there. Mark that low, mark that high. See that, right? Draw that prior swing. Don't miss that first test short off the top of that channel. So same basic idea there. And also too, remember, don't forget too, a lot of times, right, we'll get that one, that two, we'll get that winning trade going lower. Sometimes though, they'll hold off the top of that range for a breakout pullback. They'll make one more leg going higher. Remember, a retest of that high. This is not a bull market right now. It's a bear market on the 60. So this is a great place right here to trap in some more of those rookie buyers here and do it again. 1, 2, again, buyer failure into bull trap pattern going lower. Leave that runner, right? Leave that runner. That will tell you, right, where to cash that paycheck on the way back down again. Now, let's kick this up one more notch, because oftentimes what happens is, oftentimes, after a big move down like this, we'll wind up going sideways overnight, sideways tomorrow morning, and then we'll get a strong breakout going lower. This is where you have to remember we have a really big move down. Now, obviously, if this thing keeps going quite considerably here, we can then look for what is basically a breakout pullback off the underbelly of that trading range. Same idea, right? Two-legged pullback, 1, 2, failure, and back down again. But in most cases, though, when you get that breakout below a range, remember the key here is after a big move down, in most cases, this is a fake out breakout. Now, how would you buy that fake out breakout? You need what's called a crown reversal pattern. Crown reversal patterns are basically two try failures with a bear trap. They're one try for the bears, they're two try for the bears. I'm gonna get right below that low and buy right into those stop losses. I teach this pattern, a lot of examples of this inside the free trading classes. Be aware, please, too, this goes against the overall trend. So in my world, this is a half size trade, a quarter size trade. It's not a full size position when I'm going against the overall trend like that. So just be aware of that, but that is the entry pattern you would use to find that bottom below that trading range. Notice that higher high in price. One try, two try, trap the bears in. Not a great place to be selling, therefore a great place for a bear trap. Now the point I want to make though here right now is once we have the amount below it, now project up above it. That is where the market wants to go. This is where things get fun because this is going to feel like a reversal. It will. It'll feel like a reversal because as it rotates off that low, that's going to be a lot of momentum. But don't lose sight of the big picture. We're overall bearish on the hourly and with a big move down. I would imagine a lot of bears are waiting up here. So once the buyers who got short off that low, once they start taking their profit up around the highs, let's see if we can't rope in some rookies up here, trap those rookie buyers in once, twice. Notice two tries there, that lower low in price and that failure into that bull trap combination as we run back down again. So beware that fake out breakout. Beware that fake out breakout pattern or that fake out breakout scenario at that low. It's a big move down overall. Be very careful not chasing after it, going lower. And remember, the amount below the range, project that now above the range. That will give you your profit targets on the crime reversal pattern I mentioned earlier, but more importantly, we'll tell you exactly where to start looking for that bull trap up there, trap those buyers in, add to your winner with a technical bull trap, and we know how the market works now, right? You want to rotate back and forth, as we go. All right, guys? Well, I'm getting excited just talking about this stuff right now. Tomorrow should be a fantastic day in our trade room. So that's a plan for tomorrow. Now, speaking of tomorrow morning, the place to be every morning, 8 o'clock Eastern time, is in our trade room. Guys, I'll put all the important links you guys need to learn more about this stuff. I'll put everything you need to learn more in the description of the YouTube video. I would start first, of course, with the free video series. Enjoy all those trade examples. Most folks start making money on that free video class, so enjoy that. Then come join us in our trade room, 8 o'clock Eastern time every morning, and we'll trade it all together. In the meantime, guys, be well out there, be nice to each other, make some more money tomorrow for us, and you better be here next time. Adios, amigos. Bye for now.